have the second presentation from Kaspa and Junny Ho. Thank you.
Great. Good afternoon, everyone. It's my first time talking in the UK about crypto. I've done a few times before in Asia and other regions. So I guess there's no one else other than Jonathan that can better talk about the essence of the technology of Kaspa. From my perspective, that we're the Kaspa Foundation, and in this speech, I'm trying to give some of the answers to the questions that Jonathan asked. Apparently, that these answers are in no ways absolutely correct or authoritative, but I think these are meaningful attempts to understand how Kaspa can potentially change what's going on with the current world. That's why the topic I chose for today is a post-Brexit era with programmable assets. And I hope people can understand that we need programmable assets for some reasons. Here are some imaginary code lines that what could have Brexit happened if you have smart contracts or programmable assets, as Jonathan told you about. So I want to start with a brutal truth, since we're doing this speech in the UK, that the impact of Brexit on the United Kingdom has been profound. And London's financial sector has never fully recovered from its effects. So you can see from this graph that the numbers and the values of the FDI projects in the UK never returned to its pre-2016 levels. And you can even see that it's even as of today, it's barely meeting the line of the 2008, the pre-recession peak time. So specifically, I think Brexit created a significant influence for the UK's financial industry. And I think politically that's because the United Kingdom have this turbulent stemmed from the EU's refusal to have the passporting rights, while the UK simultaneously sought to preserve the London's financial leadership across the continent. So the result we have been seeing is an incomplete decoupling and enormous uncertainty in how assets should be handled, right? Like British financial institutions lost their passporting rights in the EU market and forcing a large number of funds and trading assets to be renovated and to relocate. So for example, the clearing services have been relocating to Amsterdam and to Paris, and hundreds of billions of euros, which worth of derivatives had to be novated and so on. So for individual investors, as well as institutions, the disruption was equally tangible, like clearing arrangements has to be changed and tax requirements shifted. There are different tax withholding rules. At the same time, the contracts need to be renegotiated. There are also the UK nationals seeing their bank accounts close, and vice versa. So the question is, how could programmable assets change this entire landscape? In short, I think that this can reduce the frictions by, imagining a regulatory orchestration protocol capable of coordinating these transactions automatically. So we can take an example. For instance, a London clearing house, if it's handling a large number of euro interest rate swap, in the real world back in 2019, that such contracts had to be shifted to Frankfurt because of the Brexit, triggering a wave of contract renegotiations. But I think with programmable assets, however, that no human intervention would be needed. So you can see here that you can write inline codes on the blockchain to say the counterparty residency is no longer in EU, what's going to happen? If the income source is no longer in France, what's going to happen? And if Brexit happens, it's true, what's going to happen? I think this is kind of resounding to what Jonathan just told you about. What if MCI just decided to kick out all kinds of DAT stocks and what kind of impact that will have? So I think Brexit is undoubtedly a great example and scenario for us to understand the shortcomings of traditional financial services. But the problems of traditional finance are clearly not limited to this. Like traditional finance also rely on standardized contracts. They rely on centralized clearinghouse, as I mentioned, the DTCC or LCH, and institutional frameworks, right? Although these frameworks, they understand how to manage risks, and liquidity flows. But these intermediaries reduce counterparty risk while introduce significant delays and lockups of funds. So also just another example of the traditional finance is that it has a very rigid structure. For example, if you have ever heard of the international swaps and derivative associations, these agreements govern over 500 billion global derivatives market. But ISDAs have created a structured risk management framework, and this reinforced exclusivity means that only large legal bureaucratic institutions and organizations can get access to this market. And that's a really bad thing in our opinion. So I guess we have talked enough about what the problems are. And I think the question now is, how do programmable assets solve these problems? And we have to firstly address this question before understanding why Kaspa is a great solution or a better solution than any other ones to the same problem. So I think there are a few examples here, and I believe that the three most important features are A, the price sourcing via the Oracle services, and B, the market creation, and C, the liquidity management. So the mechanic of a programmable asset should involve the following components, right? Like for price sourcing Oracle, you should derive their value from off-chain financial institutions, such as stocks or commodities, and Oracle can securely sources and delivers the price feeds to the on-chain infrastructure and ensuring real-time market tracking. That's also something Jonathan talked about. And the second part is a permissionless market creation, such as a fully decentralized spot and derivatives exchange based on order books and so on. I have examples on that. So you have professional market makers to ensure deep liquidity from the outset. And the third thing is liquidity management and how you combine the fragmented liquidity. So there are a few examples here. The very first example is for the cross-nation transactions, as those between national banks. So I'm fabricating an example. If you are buying from the Hong Kong, the US, or Indian National Bank from the Bank of England, you have to have an environment for the entire cross-chain interoperability protocols, for the data feeds, for proof of reserves, for identity management, and for automated compliance, and a lot of things. And you have to firstly send your transactions through SWIFT to this on-chain environment, and then this on-chain environment can send the Web2 API events to the Inter, and the Inter can forward the payment instruction and confirmation to Bank of England before getting the transfer tokens and so on. So this is a clear example of how on-chain flows of money can happen across nations, and what kind of on-chain environments will be required for such operations. A second example of this can be more specific. So on the left hand, you will see this is what happened on the DeFi world, and on the right hand, this is what happened with a traditional finance world. So if you see you sell a DeFi version of the stock on an order book, it means you have to create a permissionless market that can match the orders. So sometimes you can make this happen in a centralized exchange. Sometimes you can also work with offline market exchanges. While at the same time, on the right hand, there are traditional market makers, and I think on the right corner, you will see the stock on the LSE, the London Stock Exchange. It's where fundamentally that get to the stocks transferred on-chain from the off-chain places. So I think the problem today is that it's no longer an issue if you want to move things on-chain. The question is exactly what Jonathan just told you about, that how can you make this API calls and the Web2 events instant and real-time by sampling an honest majority. So before getting to the Kaspa part, I think the last thing I want to mention about is liquidity management. So Jonathan talked to you a lot about the conditionals, right? About what you want to do if, let's say, MicroStrategy gets kicked out of the MSCI index. And I think for like professional traders, you can already have some logics with your trades. For instance, in Binance or in central exchange, right? Like you can have a stop loss. That's the easiest one. You can have iceberg orders. If my order is taken, let's initiate new ones. And if I want to do take only orders and so on. So I think the major difference we are drawing here is that we believe that conditionals can be anything. Like Kaspa is trying to build an as inclusive as possible network. It's almost like the large language models. In the old days, the AI says you can only do this with support vector machines and random forests. And now people say, hey, whatever I say can be interpreted by AI and help me do some job. And this is the same. So my example provided here is that if I am a trader and I want to program in some instructions, such as if Elon Musk posts something like Tesla stock price is too high, I want to immediately sell all my Tesla positions. And this is some kind of conditions that is extremely arbitrarily set, allows for full freedom of individuals trading that has never happened on any other chains. And that's something we believe is extremely valuable because it can be inclusive of anything possible. So why is this problem so important? It is because that, again, Jonathan told you that there's no other real-time decentralized consensus. In other models and other solutions, such consensus and voting results can be manipulated, and it essentially threats the security of your programmable assets. So the examples here are, if you ask about the gold prices online, you can get honest answers by sampling from the honest majority from Kaspa. But look at our counterparty. So this screenshot is from Polymarket. It's one of the most popular prediction market app on Ethereum. So earlier in March, there was this bet saying, would Ukraine agree to Trump minor deal before April? And you can see here, by March 24th, nobody thinks it's going to accept it. And it's almost a no, a negative answer for this deal. But somehow, a whale with over 5 million governance tokens for the UMA Oracle, and that's an Oracle service used by the Polymarket, they're able to manipulate this result. So it's almost like, there's a bet saying if the sun rises from the east or the west, and someone forces you to accept the answer, the sun rises from the west, and you lose money because of that. So I think that the problem is quite simple and it's quite big. The stance of Kaspa and the foundation is that we believe there's no golden single source. You have to rely on as many possible as sources of data to discover the truth and to get the honest answer with real-time synchronization. On this image, what you can see is that the reason we believe Kaspa can do this is not just by Jonathan or his core research group. It's also some effort co-built by the entire community, where you can see about 1,000 nodes across the globe that can give you this honest answer, because it's very hard to believe why 1,000 people across the world wants to lie at the same time. So basically, on Kaspa, we think the Oracle service and the price sourcing is trustless, and the market creation is permissionless. With all these kind of minor hubs that are potentially marketplaces, you're also able to combine the liquidity globally, and that's the very fundamental basis of the potential delivery of Kaspa of instant global synchronization of consensus. So to close off, I want to compare Kaspa solution to the currently existing solutions. I feel that's something the Kaspa community is not that aware of. So for instance, on the left, you have a private blockchain by JP Morgan. Obviously, that's a huge chain, has tons of users. And we have, I would say the best solution so far is by Chainlink. So they have something called a Chainlink environment, and it's something called instant runtime or something. So it can bridge between private blockchains and public chains. So the essence of that idea is still somehow to get as many nodes as possible, but the difference is that this node stakes the linked coins to get listed as in the validator set, and you'll be trusted as honest. Yeah, I think what the Kaspa solutions instead is offering a lot of blocks and a lot of miners to replace the validator set that Chainlink is trying to rely on here. Although that for Chainlink, you don't have to rely on trust assumptions of the Oracle network, but you're still relying the trust assumptions of that enclave trusted execution environment. So I don't think that solves the problem at all. And the Kaspa high block rates solution is a better solution for such kind of scenarios. Very shortly, and I think this can be actually elaborated to another like 20 minutes talk about privacy, because I think the market these days pay a lot of attention to privacy like Zcash or confidential computation. I think that the model here for Kaspa is that you have a huge mining pool, let's say 1% of the total computing power. So, and you have 100 blocks per second. If you're a professional market maker, you can always have your own node and mine your own transaction, which means if Kaspa is generating 100 blocks per second, that you can always get your own block. So your transactions is in your own block. You don't have to broadcast that and disclose your intentions. But however, as Jonathan pointed out, that you will have the real-time synchronization, which means in less than 10 seconds, this block is going to on-chain. So it means your transactions no longer go into the mempools. It can directly go into your own blocks, and you have your entire block on-chain, and that's a huge improvement. So that's all for my talk. I think that it's also worth to know that Kaspa adoption grows very quickly. There are a lot of adoptions by merchants. There are also listing companies, at least 2 of them that are holding Kaspa on their balance sheet. That's a very inspiring progress we're making. And for London, that there's a Wolfie's bar, almost like a pop key hub of Bitcoin. We have a gathering tonight, this evening there, and you're welcome to join to learn more about Kaspa. Thank you very much.